Let's see. I am not getting audio through YouTube right now. There it is. Okay. Looks like we are good. Can I get just a quick confirmation on YouTube? Audio is coming through. Sounds okay to everybody? Good morning to all. Okay, so let's go ahead and get started. We'll kind of monitor this as we move forward. So welcome everybody. My name is Jared. This is Engineering the Markets, and it is May 16th, 2022. We're midweek and, we're mid-month of May. We're looking at our week that was. S&Ps did have more downside activity last week. And then, of course, Thursday and Friday, some fairly interesting response off of some nuanced areas of the market. We saw a technical bounce and a bit of price recovery back into where we started on the week. So that higher volatility still remains in the market. We're getting plenty of back and forth trade in regards to downside and upside, just staying on the right side of the trade as it's forming. And we'll talk about some of these levels that we did hit. So first and foremost, as we often do, I want to talk about the expected move both from last week and for the week ahead. So for those unfamiliar, the expected move, we're often looking at the Friday close of the SPX. In this case, I'm using the ThinkBack tool in this platform to make sure that my data is loaded from the Friday close or on the weekend session. So these are non-trading days showing, and therefore the data is static. Now, additionally, one thing you want to watch out for this week is as you're looking at the Friday series, there are two series. One of them is an AM settled series. This is the morning settlement. Do not use this one for expected move. What you want to use instead is the normal Friday series. In this case, it is also a monthly series. So this is our May expiration for the S&Ps. Additionally, grabbing the number, what I normally use is the expected move calculated by the platform. So for this particular week, we're looking at about a 132.75 expected move. I've gone ahead and marked that on the side for reference if anyone needs that information moving forward. So all I'm doing here is looking at what the option market is pricing for the week in terms of price volatility, and that pricing has been established on Friday's close. So that data should be basically locked in, and any participation that occurred last week would have been using that volatility range in order to define option risk. So now that we look at the charts, let's talk about what happened last week. Last week, we did have the market testing and basically breaching expected move on multiple sessions. Monday, we saw a full retreat into the lower bound of the expected move. This was about a 134-point expected move, so pretty wide for the S&P overall, especially since we started with a gap down open from Friday's close. So the market started postured fairly weak. We saw multiple days of response in this area. And then on Wednesday, we had our first close below the expected move. Now, setting up trade around this can be a little bit challenging, but some of the concepts that you want to remember is that when the market breaks expected move, there are only really a couple scenarios that can take place. First and foremost, we can break expected move in some sort of responsive way and then come back in. Really nothing of note there, just showcasing that the market has priced the movement fairly well. we can breach or get outside of expected move, especially on a close. This is when you start to pay attention because volatility can expand. And usually when you're looking at these events, you're looking for the market to run towards multiples of the expected move. In this case, 2 times expected move, which I went ahead and marked once the break had occurred. And then last but not least, whenever we get to those extremes, the market can either stay outside and we can get some very wild decline in terms of expansion. And this is where the market doesn't recover back into the expected move. We just continue to go for multiple sessions, or we can come back inside. And that is always the more probable scenario. Just thinking about whether you're more likely to close within or without. Closing within is what the option market deems the statistically more likely probable scenario. So even though the market came outside and actually went almost 2 times the expected move, we did happen to close inside the expected move on Friday. And when you're thinking about this, there's a few ways you can trade around it too. For one, having your target set up, so knowing that this is the 2 times expected move kind of helps with your reversal ideas and understanding that this is a target for this expansion. Additionally, if you see the type of bullish or bearish response against these levels, you can simply play back inside the expected move. Now, usually when you do that, you often target somewhere around the edge because you don't necessarily know how much momentum the market has to get back completely into the middle or even somewhere above previous price activity. Instead, you're just targeting the outside of the range. And that's kind of the idea behind expected move is it does indicate a bit of a volatility range or a box of trade. Targeting the bottom side, in this case of a breakdown, is more or less a back test of expected move. So what's interesting about these price levels? Well, first and foremost, the 2 times expected move. That is kind of an interesting note for last week. We haven't had that in quite a while. Last time we saw a fairly significant outside breach was during the March rally. And that was this breach here where we stayed outside and actually hit approximately 2 times expected move. Additionally, another interesting bit about this level is if you're marking from all-time high, this move roughly represents a 20% drawdown for the SPX. So while the market hasn't necessarily entered into the quote-unquote bear market drawdown, usually you're looking for a close of 20% or more from all-time high. We have essentially touched that 20% level. So our drawdown has been similar to what we saw in the NASDAQ earlier this year. So S&Ps are looking at a technical bounce at this point. As we note our expected move for the week, the top side of that expected move, remember you want to price this from Friday's close, so plus or minus from the close on Friday, which is 40.23.89. The expected move high is about 41.56. The expected move low is about 38.91. Now, some other interesting tidbits here. As I mentioned, when you're looking at the option chain for the SPX, you're going to notice that this week is the first full trade week where the S&Ps have all days covered by an option series. So we have full daily coverage, Monday, Tuesday, Wednesday, Thursday, and then in this case, Friday has 2 series along with our monthly series of May. So depending on how diligent you are, you can be marking things like daily expected moves for the S&P. How would you use this type of information? you probably want to think of it similar to pivoting strategies. For example, anytime the daily expected move has a breach or a break, you often want to think about the next day having certain implications. Higher volatility coming into the next session on breaks, and the idea of an expanding trading range in regards to expected move. You'll also note that if you have this information every single day, you can also use these as potential inflection points. Where does the market tend to trend or trade into as far as option risk? And when those targets are met, the expectation of further price action is actually a bit rare, because similar to the weekly expected move, markets don't tend to want to expand. They don't want to go out of balance too often. And then last but not least, if you are trading SPX index options, you now simply have more choices. Every single day, you can use 0 date to expiration strategies, and using those strategies from an intraday trade perspective is highly advantageous if you have those refined and ready for intraday trade. So lots of good information for the SPX this week. Basically, the index in focus, I wanted to bring a lot of this to our attention. But last but not least, I want to talk about this May close, this May series close. So this is our Friday series. And as we know, expected move came in at about 132 on Friday's close. But another bit of information you may want to pay attention to is where is the option market likely to price the S&Ps for this close. Now, obviously, we have a whole week of trade ahead of us. There's going to be lots of volatility and price interaction in between. But when you're talking about a monthly series in the SPX, it's a very impactful option series to pay attention to. Typically has a lot of larger market participation inside of it. It also tends to be one of the higher volume series for the week. So a lot of the trade tends to be centered around it. Even shorter dated series will sometimes place their option risk around what the higher option series is pricing. So when it comes to this particular series, we have our expected move. But if you're looking at something like maximum pain type readings, or where is the market making more likely to run the price if we see, let's say, trending activity into those price levels, the number that stands out this week is 4,300. Now, you're not going to see anything crazy at this particular price. You'll see some high open interest. It's nothing that's larger than other prices. You'll note just 50 points away, we have similar OI. And as you zoom into closer pricing, you'll even notice that there are some other OI standouts at 41.50 and basically all of our $50 ranges. So nothing really is going to stand out here when looking at the series directly. But if you're familiar with maximum pain type calculation, the idea is that these price levels provide sort of the most benefit for the market maker to have the price close near that range. Usually they'll see the maximum number of calls and puts expiring around these ranges, and basically the premium decay is the most advantageous for the market maker. So conceptually, if you have availability to those tools, we'll certainly share it in the BBT chat room. You'll notice that number 4,300. And if you're optimistic to those prices, what makes that number so interesting is the type of price interaction we've had around it. So thinking about 4,300 here, just kind of posturing whether this could be met this week, that essentially represents another move into our core resistance for the S&Ps. So this is representing essentially an area where we've had a pullback. We've had essentially a new retest, and this is after a sell swing with a lack of follow through. We had a much deeper sell swing, and then of course our last attempt. This is also where the Fed minutes were released. So the press conference and basically the reactionary high that we got from that was all centered around 4,300. And that was, of course, before our most recent and pretty prominent sell swing from that price level. So an interesting spot for the market to attempt to reclaim. The thing about maximum pain is you don't necessarily want to worry about it too much until you see enough of confirmation to even consider that target. And obviously the catalysts this week are, there are some higher impact catalysts. Norm and Carlos will talk about that a bit more. But overall, the market should respect normal conditions. We're talking about normal expected move, normal price ranges, behavior that we've come to see works very well for expectation. And if we get a breach or a break from our expected move, we can talk about the idea of a 2 times expected move rally, similar to what we got on the downside, basically reflecting what happened last week in regards to our sell swing. So all of this is going to be on deck for us this week. Lots of interesting price activity in these levels. We've obviously been here before. I still have my notional gap marked by this rectangular area. So we're kind of getting back into that price level to see what sort of retesting we want to do. We have things like our 400 print. Want to be thinking more of that as a value zone for the time being, not necessarily support or resistance, because currently it's not marked in that way. And additionally, if I look a little bit higher here, we just want to talk about the idea of maybe retesting from a position of weakness some more breakdown levels, basically coming back to test these areas first before, of course, seeing some back and forth trade. So last week was indicative that there was some short covering going into the weekend. Obviously, the rally is one signal. We came off of a sell swing at the lows with indecision. You also may want to pay attention to a couple of products this week. And I'm going to show examples of 1 or 2. There's plenty of examples, but the strategy around them should be similar. So depending on how and which ones you want to go after, basically up to you. So one product that I think a lot of people are paying attention to these days is the like of the ARK ETF Innovation Fund. So last week, there was significant weakness in this product. This product is derived from a lot of relatively weak growth names over the past couple of months. And then, of course, as we see inflow and outflow in the respective ETFs, these can help us get a sense of the underlying products and what their next move is going to look like. Now, as with everything, market has yet to determine sort of the next wave, but if I'm looking at the volume signatures here, I'm definitely looking at something indicative of capitulation. These are some of the highest readings this particular fund has had since its inception. So we're talking about highest volume readings ever in regards to daily and weekly price readings or volume readings. Pulling it up on the weekly makes the picture even more clear. Lots of downside activity that was rejected in the form of a bottoming tail with the highest volume print on the weekly. So if I was a betting person, as the option market allows me to be, I would say that this is an area that you want to pay attention to, because while this is still in daily, weekly, monthly downtrends, these are price levels where the market can start to change around. It's also indicative to show that this is a retest of our previous lows, basically the CBIT lows. So yes, the market has corrected in this product. Yes, this is one of our more beaten down holdings in regards to ETFs, but looking at the next wave of movement, there are some setups here starting to potentially form. For one, you could start to look at this as a possible bounce opportunity. Just the idea of an oversold, getting into a bounce condition. And just talking about the upside here, let's look at the past 2 days. This move alone was 25%. So whether you're bullish or bearish is not really the idea of how to position around this. You can certainly wait for this to fade or come into stronger resistance on the bounce, something like a sell swing, or even just this area here, kind of back testing the first pullback. Getting into these areas, going short once again, basically playing the trend, nothing wrong with that strategy. But as we're sort of mid-range in regards to a sell swing and this high volume low, you might also want to be thinking about some premium selling opportunity. A lot of these high volume lows will offer a moment where the volatility of the market subsides. Now, I'm looking at a particular ETF, so I don't have a VIX or anything indicative to that, but you could start to pull up things like what are the implied volatility readings over the past couple of weeks. You can also pull that up on something like a chart with a simple study. So implied volatility. And what you'll notice is we're getting some of the highest volatility readings as well as volume readings. So these are basically spikes, inflection points that the market is trying to set. And if this does mark areas of interest, areas of trade that offer basically potential trend changing opportunity, then you may want to position around this area. You want to be thinking about maybe selling against this low, allowing for volatility to come out of the market slightly, collecting premium, using this low as risk in setting up potentially bullish plays. This is still on the idea of reversal strategy, but this product is in an hourly uptrend. We had a high impact low, a pullback about 50%, and then this market has continued to trend. So is this market going to continue this behavior? Well, keep some of your indication on chart. If you see hourly breakouts, you might want to respect that for the time being until we top out and change hourly trend back in the favor of the bear. And then, of course, the premium selling strategy, really not indicative of movement in the stock, more or less indicative that you've hit some of the highest volatility seen since this product was created. Therefore, selling against it, using this moment in time to collect, and then, of course, maybe leveraging some of that into neutral or bullish strategies moving forward. Now, like I said, there are multiple products like this. What you may also want to do this week is look at some of the holdings of these products. These are all going to have similar lows, albeit not the same volume readings, because of course the ARK ETF tends to have its own inflow and outflow. The holdings themselves will carry some of that momentum depending on how that product moves. So you want to be thinking stocks like Tesla, stocks like Roku, stocks like Zoom. These are all products held within this particular ETF, hitting inflection points and seeing, at least over the past couple of days, multiple percentage upside from these lows. So selling or using this area as risk tends to be a very technically minded strategy. And yet we're also looking at option volatility as a potential opportunity. The stars are kind of aligning in a couple of different ways in these products. So please, if you're interested in that, take a look at the market last week. A lot of relative lows have been set for the time being. We're seeing pivots on the daily, so confirmed days trading higher than Thursday's close. Those are daily pivots. And all in all, just using this area as our next risk level. If the market continues to sell through it, we'll know that that was a short-term bounce. If we see continued upside, think about some of those upside targets. And then if we trade sort of mid-range, this week might be a little choppy, But overall, we have our expected move as a guide as to whether or not we can expect further upside, further downside, or something in between. So with all that said, my name is Jared. This is Engineering the Markets. Trade safe. Stay tuned for pre-market prep, and we'll talk more tomorrow.
All right. Good morning, guys. Welcome to the pre-market prep. I hope everyone is having an amazing morning. I hope you guys had an incredible weekend. Good morning, Peter. How you doing today?
Good morning, Carlos. I am doing fantastic. How are you?
Very good, man. I'm glad to hear you're doing well. Glad to hear that you had a great weekend, and hopefully everyone else did as well. Guys, let's get into our gappers list this morning to start the week. Before we do that, thumbs up to Jared for taking us through the engineering the markets every morning, Monday through Thursday. So we appreciate that very much there, giving us his insights about the overall market and possible things to look out for. So thank you, Jared, for that. Here, guys, we are swinging the other way today. We are going green. So a lot of stuff in the green this morning. A couple of tickers here, as you can see, doing okay this morning. Although the SPY is pretty much flat right now. It feels like it's on the upside at least, right? It feels like it's moving up. It was down quite a bit this morning. It's recovering and looks like it's about to go green now. And then towards the downside, we have a couple of stuff in the red, including Twitter. I mean, Twitter's becoming very interesting now with everything going on there. I saw a tweet from Elon Musk earlier, but I didn't get a chance to actually read it. Or maybe it was not him. It was just like something about Twitter with his name on it. I didn't get a chance to click on it with everything going on this morning, but that should be interesting. And as we're talking here, Peter, we're seeing the SPY going into the green now. Let's see if this is going to hold. So looking forward to see how this week is going to be. Let's go over to our overall market. And by the way, Peter is covering for Norm this morning. There's some stuff happening over there in Norm's area, storms that he didn't get great sleep. So wish him all the best and rest. So don't look at the U.S. economic calendar here. That is not correct. That is not up to date. So don't mind that. But Peter, your take on this market coming up this week? What do we have?
Yeah, well, we'll talk about Twitter in a second when we get to the gappers list. But from an overall market perspective, the only news event that we've got is the Empire State Manufacturing Index. It doesn't normally have a big impact on the markets overall. It's supposed to be coming out any minute now, although I haven't seen the result. No surprises are expected there. As you were pointing out, Carlos, we're seeing the SPY sort of go from red to green. We're just on the green side of the market right now. Though it's the markets are looking good, I guess. I mean, after Friday when we had I thought we had some great price action Friday, some great trading opportunities. So
Yeah.
whatever happens, I hope today brings more opportunity.
Yeah, absolutely. Yeah, Friday was a lot of fun. Even Thursday. Thursday was not bad neither. So we'll see how this week is going to continue. Right now, the SPY is sitting at a nice area here of above 400, and that seems to be becoming somewhat of a level going forward. So we'll see how that's going to play out today and the rest of the week. With that said, guys, let's get to our gappers list this morning, starting with let's see what's gapping down. It's not a whole lot there. Let's start there and then work our way to what's gapping up this morning. On the down list, we do have IREN, and this one here is down 26%, so a nice big chunk there. But it is not looking pretty by any means right now. If you look at the pre-market activity, it is very, very scattered. So it's not a whole lot going on here. Not sure if there's a catalyst. There should be a catalyst if you're down this much, 27%. And the daily, it doesn't get volume, guys. Even on Thursday, which seems to have had the most volume here, 609,000, right? So that's just not enough volume to keep us interested in this one, even with the catalyst here. So it doesn't look good. This is an energy company, it looks
Yeah,
like.
it's out of Australia. I mean, I think they last week they had reported their quarterly earnings, but I don't see any news for this morning. So honestly, I'm not sure what is pushing this, but I don't like the look of it, to be honest.
Yeah, I don't like it at all neither. So let's move on down to Twitter. So Twitter's here, guys. They are down 2.3. If you guys remember last week, this was Thursday or maybe Friday. Friday morning was a very early morning. Elon Musk tweeted out, there's some issues here with some bots accounts.
Yeah, he had sort of tweeted that the acquisition was potentially on hold over the weekend. We've heard the spokesperson for the company has said that they have accused Elon of breaking their NDA. I think he was talking about some of how their algorithms work, and they consider that a breach of their NDA. So what that means to the acquisition overall, we don't know yet. But you're seeing. That uncertainty create the impact on the stock we're seeing this morning.
Yeah, I saw that. If they're talking about that tweet he sent about the way the algos are, manipulating and all that, that's nothing new. I mean, I think we all know that. We all know that for a fact that these computers are doing what they're doing to try to make us watch certain things. That's in every platform too. It's not just Twitter. So I mean, we'll see. We'll see what ends up happening there. But that's nothing new, I think, to the consumer or to
Yeah.
anybody else. So, yeah. Let's see what happens here. In any case, Twitter, guys, I believe is in play today. They are down 2.3. I mean, we're back at the level before we had this gap up, right? So anyone buying here thinking this thing was going to go, straight to 106, and I don't know why I picked that number, but I just did. It's not feeling too well right now because they are down right back where they were. So Twitter, let's put them on here, guys. Twitter, 600,000, a little bit light on the volume. Twitter can do heavy numbers. This is not great just yet, but I expect this will be some fun today, especially if news continues to come out over the internet on what's going on there. Another one coming up on our list just now is PLTR, one that we looked at plenty of times in the past. They are down 2% with not a great pre-market activity, so maybe we need to give them just a little bit more time here. We got this one giant candle here, 296,000. Yeah, maybe we'll give them a little bit more time here to develop. We'll put them as a possible for now. Let's head over to our gap up list this morning. We got a couple of things on here. Save, we have Save, which is Spirit Airlines, and we have some others on here. Did Save get bought out? Is that what they're gapping up so much?
It's not bought out. There's basically been a hostile takeover bid made by
Hmm.
JetBlue.
Hmm.
I think the reports were a little confusing. It looks like the current offer is $30 They say that they're willing to go up to 33, but that's a level at which they'd apparently previously made an offer for Spirit Airlines. So I guess we'll have to see as this story develops. But the reason why it's moving is because of this, hostile offer made by JetBlue.
Yeah, they really want this one because I know Frontier's like on there as well, so they really want to get this company under their belt here. So here's Spirit Airlines, guys, up 14%, 2.5 million shares traded. Very active pre-market activity this morning. Definitely in play. We'll see how that's going to turn out with that catalyst there. Heading down the list, we have CVNA, and this is not looking great. This is Carvana, by the way. We looked at this before. It's not the best trader, so I usually tend to stay away from it. I mean, they're up nice 11.8 this morning. I know it's not earnings because we had earnings some time ago. I know that because I believe Ed was trading this one during earnings and did very well. So maybe a possible, guys. Again, not a big fan. Not sure what the catalyst is, but they're up nicely, almost 12%. They got a high not a high, but they got a decent short interest here as well. So 28%, almost 30 there. So we'll have to see how that's going to play out there as far as possible short squeeze, if any. Heading down, we have SoFi here, and they are up 7.4, 1.8 million shares traded. Must be, yeah. So we got a couple of block trades because obviously the volume is not adding up to that, right? At 1.8. So a couple of block trades being done, most likely recorded at 8 a.m. this morning. Not sure on this one. Possible for now.
Yeah,
Unless
no
you,
big news I can
yeah.
find on SoFi. They had some upgrades. One specific upgrade where it's funny. They were upgraded, but they lowered their price target to about $10. So SoFi is one that it usually gets volume. It can move. It's not a preferred trader for me. I'm not sure that I've actually ever even traded it, but you might want to keep an eye on it, or at least set some levels to see what happens.
Yeah. I agree. We'll put it on here as a possible for now, and if we can move it up to our main list, we definitely will. DWAC is up 5.6. Now DWAC is going to be in play going the other way as Twitter goes down here. So they're up 5%. I still find this one besides a horrible platform, which I think is just, I don't know where this is going to go. Horrible to trade. Very, very bad to trade. And let me not say horrible platform. There might be somebody that you actually like this platform. Is a choice, but yeah, it's horrible to trade, man. I don't know if you ever traded it, if you ever looked at it. I personally stay away from this one. I just don't like the movement and the lack of volume.
I mean, I watched it when it first came onto the markets because the trading field felt a little smoother at that point in time. But you're right.
It did.
Nowadays, it
Yeah.
it can be gappy. The spread's very variable, right? Like it'll
Yeah.
seem
Yeah.
reasonable one second, next thing you know, it's got 40 or 50 cents. So you're right. I find it tough to trade. No matter what you think of the company, it all comes down to tradability, and do you think we can make money off of it intraday? And DWAC's one that it never feels like it's worth the risk for me intraday.
Yeah, I second that there 100%. Let's head on down. STNE. This is on our list more often than not. I mean, this is always on our list, and I never end up keeping it, guys. I just think it doesn't trade very well. It's just one of those that I just don't keep on there. Today is barely making it. You got 101,000 shares traded here. So again, barely making that. And that might actually include a couple of block trades because you have 40,000 here. And I don't see how they're getting another 100 out of all these maybe 5, 4. Yeah, maybe they're getting 101. Either way, not looking good. We'll skip on this. Heading down, we have IonQ, which used to be extremely active. Now we come down quite a bit from their highs, 3.7 this morning, 237. Again, another one that's just not calling my attention. Let's head on down to DKNG. Okay, this is looking a little bit more exciting. We're up 4.7, 419,000 at the moment. Nice little bounce here with the overall SPY, of course. Looking a little bit better pre-market wise than what we've seen so far. Not ideal, still not blockbuster type stock at the moment, but definitely up 4%. And Peter, I'm not sure if we have any independent news on this. It looks like just overall SPY, a movement on it, if I had to guess.
Yeah, I'm not seeing anything specific. I mean, if you look at that daily chart, right? They've been on a downtrend for several months now. Well, longer. When I say several, pretty much a year, right? I think they hit their peak back in summer last year, August or so last year,
Yeah.
and have been sort of moving down ever since. So eventually you'd think that they will bottom and start to see some opportunity in the market. But yeah, I mean, there's no news that is really driving this.
Yeah, I definitely will put as a possible. Definitely don't like it as much as I would like. Here is Neo. Neo this morning they are up 3.9. They got some good volume here. 2.2 million shares traded, and you can see a nice little pop here around 745 ish or so. And that has been continuing here up to this level 1496 that we have here. So nice little breakout there on Neo. Again, a lot of stuff bouncing back the last 2 days, right? Obviously. But I like the volume on Neo. So I think I'm going to keep an eye on that and see how that's going to play out today. Heading on down, we have Netflix. Yeah.
Comment on EV stocks. EV stocks, they continue to be in the news. There's all sorts of, sort of rumors that are coming out and information. I think it's because the market is heavily, this market segment is so well followed right now that we're seeing a lot of people. Every little bit of news, they're like, "See, I told you, EVs are going to be fantastic," or they feel the other way, right? See, there's a bad piece of news, it's all going to crash and burn. So, Tesla is sort of almost a poster child for that. The movements that we're seeing these days in Tesla, seem out of proportion with the news that we see. Over the weekend, there was some more news: Tesla having some production problems with some of their overseas manufacturing. But it doesn't seem to matter, right? That'll take it down for a moment, and then of course it bounces back up. And Tesla, we're still getting the $50, $60, $70 moves in a day. So I think these are always worth keeping an eye on. I usually watch myself, Neo, and Lucid. Those are the two that I like to watch. But you've got LI, which we've looked at before, XPEV, Tesla, like we just talked about, of course, and then some of the like Nikola and some of those. So I think generally, if you're keeping an eye on this sector, it's worth doing.
Yeah.
The other one I wanted to comment on quickly was DraftKings. This is more of a personal comment, but obviously, being a Canadian, I am required by law to watch the hockey playoffs.
Yes, agreed. Agreed.
But if the ads for the NHL playoffs are any indication, the competitive space that DraftKings are in on online betting is becoming super saturated, because I swear that 2 out of every 3 ads are online betting platforms. Everything from the MGM online platform app to Bet365 to it seems like every single ad is for an online betting platform. So I don't know whether they're actually getting that much business or they're all just trying to create a market. But based on what I watch on TV, it feels like online betting is like everybody's doing it, because they're like, that's all that they seem to be advertising. It's a little weird.
Yeah, I agree. And it's funny how the type of celebrities that are getting to do these ads, they're not cheap. So to me, those ads look like these ads are, sleazy type ads, car salesman type ads, right? But they get like, Jamie Foxx on a lot of them, a lot of basketball players on a lot of these. I'm like, how are these guys getting these stars? They must be paying some big money for it. So there's some money there, it looks like. And yeah, their ads are all over the place, man. Even on TV, they're down here. Without hockey, we're seeing that too. Agreed. So here we go, guys. Let's take a look at a few of these. PDD is on deck here right now. They're up 3.1, 250. Netflix up 3%. Again, just a lot of stuff just getting between that 2% to 3% bounce, which is not really heavily in play. But Netflix will still be a good one. AMC doesn't look good at all, guys. This looks very sloppy right now, and the volume is just not where it needs to be. This is no longer the AMC that we kind of had a couple of months back, right? It's not the same thing. I am going to add Netflix. This could be interesting today. We'll see where that goes. I mean, as you know, this thing has been beat up pretty nicely here, man. 162 on Netflix. Who would have thought? That is just insane on this massive company here.
Netflix has had some general bad news with their business and the reduction. One of the first reductions they've had to report in users. The CEO coming out and saying that they're considering having a lower priced service that would add ads, which they've staunchly refused to do in the past. And then, once again, Elon's never afraid to provide an opinion. And once again, over the weekend, he tweeted about Netflix, talking about, I can't remember specifically his wording. Would say, you know what's wrong with Netflix? He believes it's their, something to do with this woke culture that he says is causing Netflix's problems. So, it doesn't matter whether he's right or not. As soon as Elon starts to tweet about something, usually it's a bad thing for your stock. So
Yeah, yeah. It's just amazed me how involved he is with everything, just out of left
yeah.
field. He has a
Well,
comment
it's one
about
of those,
everything.
I think he feels empowered these days. He's got an opinion on everything, and he's not afraid to tell us. So,
Yeah, that is very true. All right, guys. So let's see what we got going on here. So Netflix, I'll add that onto the list there. And I think we're all set. Let's take it to you, Peter, and then the room, and we'll see what else we can find that might be worth watching. Anything you like this morning, Peter?
well, I'm always willing to take a look at AMD. Today is one of those days where AMD is doing nothing special. It has about normal volume for a non active day, or a day without a catalyst. But I know that it trades once the market gets going. So if you have a stock that you typically watch where it's generally got good volume during the day, AMD will trade 60 to 80 million shares on an average day. So it always
Yeah.
gives you good flow. Watch some of those. AMD, Apple, and Facebook are the three that are typically on my list, because no matter what they're doing pre-market, once the day gets going, they can provide opportunity. So other than
Yeah,
that,
yeah.
I've got nothing else special.
Absolutely. And JP was mentioning AMD, and I knew we were going to get to it, even though it's not on our gappers list. AMD, like you mentioned, Nvidia, Apple, and some other ones that, again, they've been on our list. At least one of those has been on our list almost every single day, right? Especially with the way, as we talked about, the way this market is moving, guys. So these type of moves, you got these big companies that are going to follow suit and going to provide some good opportunities. So you don't always need a catalyst. I know some people, a lot of traders sometimes get hung up on that, like, oh, we have to have a catalyst, and that's okay if that's the way you trade. You want to maintain that, that's fine. But I'm telling you, there's plenty of opportunities when the market is moving the way it is to trade things that do not have a catalyst. The catalyst is the market. That's the catalyst, really. The market swing, the up and down, and the uncertainty, and just the overall volatility we're getting. So yeah, AMD on deck, guys. Again, pretty light, really light on volume today, though, after such a big day Friday. But like you said, that's going to change. With that, let's swing right into Apple. Apple's another one that you can watch as well. This one in the red, trying to go green and not able to hold at the moment. I'm going to put them as a possible here, but they're most likely going to get on the list here unless anybody has something that looks more amazing. Nvidia has also been really good, guys. Again, these three are just worth having on your list. If not on your main list, at least as in secondary. All right, so we got so a couple of, so I see the upgrades there. Thank you, Dan. And also indigenous pathways in the electrical trade gave me that info. So thank you as well about Netflix there. All right, let's see what we got going on, guys. To the chat room, Alfredo, let's start with you. You're giving us Baba and Neo. Neo, we have Baba this morning. This is looking good actually on Baba. Got a nice little pre-market activity there. 633,000 right now. What's in the red? Pretty far down here, and now we're hanging around 88 from 86 lows this pre-market. So I do like that on Baba today. We'll keep an eye on that one. Let's head on down. What else do we have, guys? Apple, we have Twitter, we have on deck, Jimmy. So thank you. As we head here, Netflix is good. Oxy, let's take a look at Oxy. And if I missed you, if I missed you above the name I'm at right now, just send it again and I'll take a look at it. Here's Oxy, guys. Again, Oxy is so hard to read pre-market. I mean, I don't think you can really read it pre-market. You just have to wait for the market open, because we've seen how horrible this stock can be pre-market and how great it can trade at the market open. So we'll put as a positive for now. And yes, it's at the top of the range. I do see that the daily looks really good. It's having a hard time getting away from this area, right? Although it's popped up its head above it a few times. It's 63.57. Has not ran much away from this level, right? So it seems to just come right back down to it. Had a hard time getting above it, as you can see here, plenty of times trying to hit that, and has not been able to get above it, or at least build a new range, right? This is the range here on Oxy. You have a small range and a big range there. This is your bigger range, and it just hasn't been able to really break out and stay above it. So we'll see. Today looking very nice this morning so far. But again, pre-market is always light on Oxy. Let's wait for the market open. All right, see a couple of you guys also on YouTube throwing out WEAT. What is this? Is this wheat? This is actually like wheat ETF. What is this over here? It's a fund ETV. Um,
Neat.
all right, it must be an ETF. Got to get that grain trade. Yeah, Jared, I agree.
Yeah, it is. It's a wheat fund. Yeah, I've never looked at this before.
Yeah,
It's the
I'm concerned with the
agricultural
volume.
commodity ETF. Yeah, it
Yeah,
doesn't look like fun.
yeah, that doesn't look fun as far as intraday trading. Again, just looks very light on volume. But obviously, if you're looking to make a wheat play, this will be it. Wheat, not weed. Wheat. Let me make sure I'm correct on that. Okay, let's see what we got going on. Let's go to Facebook, and then we'll go to Rivian and the VREU. Facebook this morning, we are again just very quiet, guys. I don't think this is really in play. And I know you're gonna say, well, AMD's not in play, Bob is not in play, and Apple's not in play, Nvidia's not in play, but they're looking so much better, and we know we're going to get the volume for sure, right? So that's the reason why we'll be choosing those over Facebook at the moment, and that can change. We also have our scanners that we can be looking at. VERU this morning up 1.4. Okay, so this is interesting. This thing popped up pretty good here, had amazing news, slowed down a little bit, dropped off because things didn't go well, I guess. And then last week, towards the end of last week, we had some good news on here. And now there seems to be back in play, trying to get back to this 15 and hopefully 17. So this could be interesting. I don't recall if it's a low flow. Let's remind ourselves here. It is not a low flow, but again, we saw the way this traded here, guys, when they had the volume. It was just wild. So if we're going to get that type of activity, be very, very careful. Treat it like a low flow. I'm going to put it down here so we understand that this is a risky stock. Be very careful. All right, I think we might just stop here and let's take a look over on our YouTube chat, see what some of our friends are looking at this morning. Yeah, so the electrical trader, I see that upgrade by SoFi is by Barker. So these upgrades, they're tricky unless they're by like a big firm, Goldman Sachs, JP Morgan, Bank of America, one of these really big names. They're questionable. Not saying they're right or wrong, but they're just questionable. I don't think they hold enough weight. Like if a Goldman Sachs gives you an upgrade, Goldman Sachs gives you an upgrade, you're gonna have people look at it because people, they put a lot of value into what Goldman Sachs has to say, and the rest of those other banks, J.P. Morgan, Bank of America. I'm not sure the other big ones that provide those upgrades. But if you hear something like Barker, which I never heard of, and what's the other one we had here? Dan had another one here too. Dan, who you had? Wedbush. I feel like I heard about them. But are there a reputable firm? I mean, reputable is not the right word. It's more of a yeah, because they could be reputable.
Influential.
Yeah, they're influential enough to move some units. There we go. That's what we're looking for. Can they move units? We know
Can
Goldman
they
Sachs
move
can.
units?
We know we're talking like true operational salesman. I know, Peter. I know you've been there, and I've been there too. So those key words. Can we move units
It's
here,
all
guys?
about volume.
So I don't think they can move units. So I don't know. I'm just not a fan of those names. All right, a few more here over on YouTube, Netflix. We have, thank you guys. TQQQ, yes, TQQQ. You can definitely look at that. I won't add it to my list, but we know we can look at that. Look at the SPY, look at the Qs, see how this is doing, and you can trade this as well as. And there have become. I don't think in the past we traded them as much or even looked at them as much, but now with this market, we're definitely looking them a lot more in the chat. You have Andrew, Brian, and others in the community trade this a little bit more. TTD, this is the trade desk, and the trade desk. The issue with them is the price action at times. Right now, they're very light on volume, only 84, but that's typically what they do. They don't do more than that. I do like the pop over the last couple of days, maybe trying to close is this little bit of a gap here. Not a gap, but trying to get to the 63, a nice level of support and resistance they had in the past. So maybe trying to get above that. But again, not really too sure on this one here. Had a good day on Friday, good day on Thursday, but I can't give them too much credit because so many stocks had that as well. So this is why I just can't give them enough credit for this move here when everything else did this, right. This is not really them. This was the overall market helping them out here. So we'll have to wait for the market open on this. So you can put it on your stylus maybe and see how it does at the market open. All right. With that said, guys, let's take it over to our community events and announcements. And with Norm not being available, I do not think I got an updated sheet, and that's okay. We'll go straight to the website. We'll read it out from there. So just give me a second, Peter, as I get to the website here, and we'll read them out from here on what we have coming up this week. So as I'm doing this, guys, hit that thumbs up over on YouTube. We appreciate it very, very much. And it does help out the channel a whole lot. It helps out the stream and everything else that we do here. So thank you for taking the time to do that. And for those that have done already, we appreciate you very much. All right, webinars coming up this week. Let's start right here.
Right, so welcome to a new week and a whole new slate of activities here at Bearable Traders. We tend to follow a similar pattern every week where we start with Monday and onboarding classes, which help our new members and new joiners and those that just want to refresh their skills to get up to speed. That happens tonight at 7 o'clock with our man Carlos over in the I guess that's in the classroom, right? Where you sort of take our new traders through an introduction session to our platform and tools and what we have to offer, as well as answering your trading questions and support. We follow that with a technology webinar by Kyle that happens at 8 o'clock on Mondays, every Monday, so that we can sort of help answer any of your questions, specifically about technical setup and support. Kyle's the guy to certainly help in that section. Then we move on to Tuesday, which is all about strategy, and we start to dig into different strategic elements. This week and next week, we're focusing on sort of market operations. How do the markets work? And we've got two. We seem to have replicated the title, but we've got two different webinars. So starting with this week, Jared and I are working together to talk about a high-level understanding large-scale market cycles. The market, while different every single day, tends to follow cyclical patterns. And we want to sort of talk about some of the major cyclical patterns that you can expect over the course of a trading year and a little bit of how to take advantage of them. So first step is to recognize them. Second step is to know what you can do with them. So that's something Jared and I are going to be doing this week, tomorrow night at 8 o'clock. And then next week, Jared's going to be talking about sort of the fundamentals of the market operations. He goes through a lot of really sort of good in-depth detail on the engineering the markets. He's distilled some of that into a webinar format for next week on Tuesday, the 24th of May. Moving us to Wednesday, then, is when we talk psychology. We will tell you the strategic and technical side is extremely important, but it is far outshadowed by the need of everybody to manage your psychology. And really, at the end of the day, the market is not you versus the market. It's basically you versus yourself, managing your own psychology. So we focus on that every week. This week, Andrew is back from his travels, and he's going to talk about some of his thoughts on trading psychology and give you his overall perspectives. That's at 8 o'clock in the webinar room, as it always is for all of our elite members. And then next week, we've got a special guest. Now, Randy Howell's going to be with us. Randy has spoken with us in the past. We always like to have guest lecturers, psychologists, and doctors, professional in the space come to us. He's going to be talking about building a winning trading mindset on the 25th of May. So don't miss that, once again, at 8 o'clock. Thursdays, then, is when we turn the sort of the focus back onto ourselves, and we talk about mentorship. We answer your questions. We directly try and help you, improve your skills and focus on the things that maybe either you're struggling with or that you think you can most benefit from improvement. So we basically go through the day with a mentorship at 11 o'clock that John has taken over. Andrew, when he's not traveling, will join as well, and I usually support John. So you get lots of support midday when we can talk about topics of specific interest and answer your questions. At the end of the day, Ed will, in his room often, will give us his perspective on how to manage the markets. And if there's after hours trading, that's one of Ed's area of expertise. He will talk about that as part of his mentorship series. And then we end every Thursday with Thor's mentorship session, which is always extremely popular. And he is great about, he will just power through your questions. He's always happy to share his insight. He is probably one of the most impressive traders we have here on the team, because his consistency and confidence is something that is to be envied. So that is the busy Thursday that we have. We often end the week with activities in the room. On Fridays, it's more about helping support our members either in the room or topics of specific interest. So if you're a member, just stick with us here through the end of the week. And like Friday, for instance, last week, we were talking about how to manage your psychology. And I'll admit, I sort of went on a little bit of a rant, but I think people found it useful in terms of talking about our experience and relating it back to topics that you can manage. So with that, we don't only do these scheduled activities, but we have tools that are available for you 24/7. Check out our stock trading simulator. It's a way that you can basically replay days. It's usually available the day after stocks have played, and you can replay a day from 6 months ago if you wanted. Right, but we give you not only the simulator, but we give you tips and tricks and different stocks you can watch on different days, so you can practice specific strategies. You can sign up for our strategy watch list, and Eamon does a lot of work in producing that and giving you targets to focus on. Or if you've got a stock that you want to look at, or go back and say, you know what, I'd like to redo Thursday's trading on whatever, Tesla or something. You can go back and replay the day and sort of and actively take trades and track it within our simulator. So sign up for the stock trading simulator, and you can get access and then save some of your preferred settings. It's completely free. There is no ads. Frankly, it's one of the few types of services where you can do that without being either bombarded by advertising in your inbox or in the tool itself. So sign up. And speaking of signing up, if you're interested in joining us, we'd love to have you. As always, we invite you to join us for a 1-week trial. So if this is new to you and you'd like to just see, is it something that you really would want to join the room? We understand there's always a cost, and you have to invest your money wisely. Check us out for the trial. Like it's really cheap. You can get it for $24 using the code PreMarket24, and just gives you a sneak peek at you get the onboarding classes that we mentioned tonight. And you get access to our chat room for an entire week. See if that's the chat room for you. There's a lots going on. We got great people who are very helpful, but we understand that not every room is for every trader. So give us a shot. See what you think. Let us know. We'd love to get your input. And if that is something that is of interest to you and you'd like to continue, are we offering any discounts on our annual membership, Carlos?
Not that I'm aware of.
Okay, so well then go to our website, and you can always sign up for sort of an annual membership, or you can certainly wait for one of the deals. But we'd love to have you maybe try on a monthly, right? And then you get to trade with us, and then once the deal comes up, you can join us then. So hopefully we'll see you here in the room. We really love to have new members and new people join. We've got such a big community that it's great to it's frankly, there's just so much help. I mean, I love you guys because, like Friday, for instance, I was, providing insight, and everybody was jumping in with their own stories, as well as throughout the day. Like, today, going back to our watch list, it's sort of a, Carlos, I think we can easily say it's not the greatest watch list that we're working on so far today.
No,
but
nowhere near.
Right. But I have confidence that no matter what happens, there are thousands of eyeballs in the room that are going to be talking about the stuff that they're looking at. And I find that is as useful as any of the scanners or other tools out there, because, it sort of gives me an idea of what some other people are looking at, and we always get some good ideas. So, that's just one of the advantages of being in a community. So with that, let's take a look at some of those levels for what we've got so far.
Absolutely. Let's definitely take a look here, guys. Joe, you're asking where's Norm. So Norm's okay. He ate a BYD burger yesterday, so he had to take off this morning. Our thoughts are with him. So but no, he's absolutely fine. He had a rough night, storms in his area, so he was like running on like an hour and a half sleep. So you guys know Norm gets cranky if he doesn't get his sleep. So he's taken off this morning, but he'll be around in chat, I'm sure, a little bit later. All right, guys, let's get to it. Here we have Twitter on deck looking okay, could be better, but I think just the overall news on this thing, I think we're going to get some volume today. Just be on the lookout. I think it could be choppy. That's my concern with this one, as it has been, more often than not. We got this pop, once we got this pop here, we had pretty good days. Then volume slowed up, and it just kind of went sideways for a long time, and even then, just very choppy. Here's Spirit Airlines. So Spirit Airlines had a big pop all the way to 21 almost. Now is down over at 1921 right here. So losing some of that ground. I love their volume right now, 3.2. I like the fact that they got a catalyst behind it here, making them move. So yeah, I think it's worth watching this one. Neo, I like as well. Good volume here, slamming against this 15 level that we have on our daily. Netflix is okay. AMD again, we'll get better at the bell, and then we have Baba here as well, which again, I like the pop. If we can hold this here, we'll have to see. So again, not the best list. Looking at our secondary list, we got a couple here that might get good, and maybe Apple, DKG could be interesting, and Carvana, PLTR. Yeah, they're not just doing a whole lot. VRU could do something at the open, but for the most part, what we have is probably the better of the not so great list that we have at the moment. So 37.86, guys, low of the pre-market towards the bottom of this on the daily. We do have a couple of areas. I see a mid-level here around 35.09. Good level there on Twitter. And then we also have 32. Again, I don't think we'll be slamming down to these numbers unless something completely goes off the handles here on the deal and everything going on. And even so, even if the deals falls apart, I mean, we were hanging out here before the deal. So maybe even if the news is that, it's not going to go forward, which I highly doubt it, we're going to get that answer today. It might just stick around here. It was there already before, Elon jumped in with the tweets, right? So we'll see what happens. Here, and let me go back real quick. Towards the top, guys, highs and lows, previous day close. You're basically taken care of there. Here is Save. As I mentioned, I like the volume on Save this morning. I like the gap up. 18.24 is the low of the pre-market, high of the pre-market 24.8, 24.92. So we'll do those two levels there. The price right now is also sitting at an area of interest, is 19.29. If you see that there, you have a opening and a bounce off of that as well. A couple of days touching that here as well, opening, closing, and bouncing off of that 19.29. So worth adding on here. In the pre-market already, you can see some of the touches we're getting at that 19.29. So that's definitely worth keeping on deck there. So that's good. Heading down over to Neo this morning. Neo, towards the bottom, we got so much stuff. Let's remove some of these levels. That's a little bit better. Much cleaner towards the bottom, highs and lows of the last two trading days. You do have this one here also, 12.92. Man, we're talking about a price of $14 on Neo. I never thought this thing would have come down so far from the highs that we've been seeing this thing trade at, and which is all the eyes and movement of volume that it had on it. So just interesting. 14.95, your high of your pre-market. Above this, you got a main level over here. This will be around 16.30, 35 right there. Tons of days bouncing off of that. So that's good support that can now become resistance. And we do have 15.75 in case we are going to run here, guys. So a level there, not as big as 16.35. Obviously, there's a major level there, but this 15.75 could cause some trouble for us on the way up. Towards the bottom, guys, highs and lows of the last two trading days. You can mark down the low of the pre-market, 13.93, but you got plenty in this area already as well. Heading over to Netflix. Netflix trying to put in a little bit of a bounce here. Towards the bottom, tons of levels. Look at that. You're set there. Highs and lows, previous day close. If you want to get fancy, you can mark down the low of the pre-market, 185.45. But again, plenty of levels down there. Towards the top, guys, we do have the high of the pre-market, which will be at 194.05. We'll slam something there. And then looking over here towards the top, guys, it's a little bit messy here on Twitter, trying to see, I'm sorry, on Netflix. I'm going to pick this one here. I think this is the level 200 because you can mark down this 204 too if you like, right? But I think 200 is where you're getting the most bang for your buck right now. Look at this, 200, tons of stuff happening there. Yes, a couple of times we did bounce over to 204, but that 200 also is, a psychological 200 whole dollar number. That's going to play a big role in this move up here, if that is what is in the books for today. So Netflix definitely in play. AMD this morning, we're looking at, yeah.
I was going to say Netflix. I was just looking at the
Yeah.
daily chart myself. Zoom out on that daily chart a little bit. Just keep it
Mm-hmm.
on a daily, but it's got such a strain. Look at the isolated set of market
Yes.
activity with these two
Yeah.
gaps surrounding it. It is going to be very hard for Netflix to get back up to those previous prices because you've got sort of that isolated. Can you imagine being someone that was
Oh,
trying to make a
man.
long-term position up there,
Yeah.
and now you're
Yeah.
sitting below 200? I think it's going to be a long time before we see Netflix back up to those prices. So, which means
Yeah.
that to my mind, we got a little bit of a cap on how much it's about to move up. But if the negative news keeps coming, it can move down a lot. It's just a weird chart.
I agree with you 100%. I mean, I'm sure it's a lot of people, and hopefully not our traders because we're amazing and you guys are great, that bought in here for that long term, right? I mean, you're thinking this is the base, and nope, look what happens. I don't know,
Yeah.
man. I don't. If we see Netflix up there again, it'll be a miracle. I don't think it's gonna happen. There's
Yeah.
just too much competition with the streaming. It's just so much stuff going on, man. It's just I don't see how they can dominate the way they have been with everything going on. Apple TV, Disney, everybody's kind of everything you possibly can think about has its own streaming service. Paramount Pictures. I mean, it's so saturated. It's just unreal. Before it was just Netflix and chill, of course. But now it's just too much stuff. Too much stuff. There's Disney and chill, Paramount and chill, Apple and chill. You could chill with anything now, not just Netflix.
Wow.
All right.
There's a lot of chilling going on.
So there is a lot of chilling going on. As the pandemic, there was a lot of chilling going on for sure. Yeah, let's get back into stocks. AMD here, guys. Low of the pre-market 93.56. So that's looking pretty good there. Interesting daily, good day yesterday, guys. Nice little pop here. Highs and lows for the last two trading days surrounding this action. And again, something about AMD around this level, either likes to be nicely above it or below it. And just kind of build that range there and here as well. So let's see. We're right at a nice key area at the moment on AMD. I don't think you need to add any levels, Peter, on this. What level do you have? This is your stock. What levels do you have on this one besides what's already listed here? I mean, it looks pretty good already with the
On the
default.
upside, I've got daily levels sitting at 99. I'm trying to get it here, 99.35 and
Mhm.
142. Just because they showed some resistance and support earlier, the 100 level, 142 cents is sort of where that little gap happened earlier in April. So I'm watching that gap area if we get back there. I thought Friday actually. I mean, look at the size of the daily candle on Friday compared to the previous few days. I thought we were going to make a big run for it, but we didn't. So, but you're right. I mean, other than that, on the downside, I've got a level at 91.64. But
Mhm.
that's it for what I'm watching. Other than that, I think we may be in this range today. We'll see what happens.
Yeah, I agree. Yeah, I like those levels very much. At first, I thought you said 140. I'm like, all right, Peter. I know you. I know you like AMD, but 140 is a little bit far out. But no, 104 is what you meant. 100
100.42.
exactly. All right, guys. Let's take a look here. So that's AMD. Baba at this moment, highs and lows of the last two trading days. I got a couple of levels here that can stay 97.78, 95.19, and then right over here, I'm going to mark down 90.94 towards the bottom, just the low of the pre-market 85.97, and you are all set. So, yeah, Adam, I was zooming out there looking for that 140. All right, guys, let's get to our
Just
moderators lineup. Go
Yeah,
ahead.
before we go there, just an update note for everybody. At the top of the show, we always talk about the market indices and what's going to affect things. As I mentioned, the only thing I was watching it was the Empire State Manufacturing Index, and normally that doesn't have a big impact. It comes out at 8:30 or slightly after. We were expecting, like the previous index had moved up 24.6. I don't know what the relative numbers relate to be honest, but we were basically that means growth, right? Right? They were expecting continued growth in the range of 16 and a half, but the number came out at negative 11.6. So a big surprise to the downside, which actually means a reduction, right? Not growth, shrinkage in manufacturing numbers. So that is a surprise and may create some concern in the market. That big of a difference. I said I wasn't expecting a surprise there. So being that we do have one, you might want to keep an eye on it. And I noticed that the SPY, remember it was green at the top of the show, now we're back into the red, and we're down about 1/3%. So we're moving lower.
Yeah, absolutely. Thank you for that, Peter. Guys, moderates lineup for this morning, starting with Thor. Not sticking to a lot, not a lot sticking out for him. Neo, DKG, and scanners at the moment. Susan will be looking at MRO, Oxy, XOM, Apple, AMD so far. Tiffany has Neo, Baba, secondary list, Netflix, and Apple. And Dima has DKG, Baba, Oxy, and Apple on her list. Megan's looking at Oxy just today. Jared will be looking at Neo, Oxy, DKG, secondary list, PDD, Lucid, and AMC this morning. So that is what we have there. All right, perfect, guys. We are all set here, 9:20, so we're running a little bit behind. We're going to give you guys, let me see, is Brian on with his list yet? No, not yet. Okay, we'll wait for our other modders to throw out their list. But guys, thank you so much. And no IPOs, Peter. You're reporting here. No SPACs for this morning. Guys, over on YouTube, Trey Safe, thank you for joining us this morning. We will see you tonight. If you are doing our onboarding session at 7 p.m. Eastern time, you can sign up for that. We'll see you tonight for a live presentation, Q&A. We can answer a couple of questions you guys might have. If not, we will see you tomorrow at 8 a.m. starting with Engineering the Markets with Jared. So, guys, Trey Safe, see you tomorrow. Peter, thank you so much for covering for Norm. And we will see you guys later.
Take care, everybody.